Canadian housing slump deepens with first drop in values in decades. So we're seeing it now hit the fan. It is slowly trickling. People aren't securing financing. People can't afford to compete with these prices. And people are completely bought out of the market. And with FOMO kicking in, a lot of people jumped on at the wrong time at the top of the market. So there's a lot of people with big haircuts. What's going on? Canadian home values fell last year for the first time in 3 decades amid falling prices in some of the country's priciest markets. Even the debt burdens increase. The value of residential real estate in Canada dropped $30 billion in fourth quarter, $5.10 trillion from $5.13 trillion in the same quarter the previous year. Statistics Canada reported Thursday 1.4% decline is the first to decrease the countrywide home values in data going back to 1990. Households, meanwhile, saw their debt burdens rise at the end of last year, with the debt disposable income ratio hitting a record of 174% in the fourth quarter. The worsening reflects the sharp slowdown in economic growth at the end of last year. Canadians are also spending larger proportion of their income on servicing that debt. That debt service ratio, the proportion of the household's income that goes to paying the principal and interest debt, rose 14.9% in the quarter, the highest level since the fourth quarter of 2007. So what's going on? People are borrowing more and more to live. Now they've reached a certain cap. The banks aren't lending money anymore. No one's lending money anymore. No one's giving out money anymore as they used to. You used to walk in to pay your hydro bill. They'll sign you up for a mortgage. Nowadays, nothing is making any sense. Nothing is driving these markets anymore. Consumer confidence is at its lowest. You're going to see 40 to 60% drops right across the big cities. Easy peasy. Why? Because no one can secure the financing with the stress testing. The only way they could prop this market out or fix this market is by lowering the stress testing to 0.5% from 2%, and dropping interest rates a whole 1%, or bringing interest rates down to 0%. With what's happening in Australia, I think even if Canada brought interest rates to 0, I think they'll still be in a really hard spot to get this economy back on a proper growth. Right now, things aren't growing, and with the middle class not buying and first-time home buyers not getting in the market is a huge problem. First-time home buyers is the key to thriving middle-class economies, and if people cannot get in the housing market, all I have to say is hasta la vista, and good luck with that. So let me know what you guys think. Let me know in the comment section below. If you want to support the transmission, don't forget to share one of my videos out there, and keep following the channel, and we're going to keep going. And I'm going to follow a little bit. I've been following Seattle and parts of America. People keep saying America right now isn't as bad as Australia, and then followed by Canada, and then the UK, and then New Zealand, and then the United States. That's the worst in that order right now. US, you could still leave where you are and still buy a 4-bedroom house with a pool for under $200,000. So US isn't that bad in comparison to where other countries where a detached bungalow or a teardown is $2 million. Let me know what you guys think in the comments below. Thanks for watching, and don't forget to hit the subscribe button. Let's see where this heads.